Hello, welcome to the European Open briefing for Thursday, April 13th. I'm Rafi Bajajian, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So after a fairly quiet start to the week, things are heating up just as we're about to get off into the long Easter weekend, where most Western markets will be closed tomorrow and on Monday. The main news is, of course, about the US dollar and what Trump has been saying about Russia, about China, and so on. There was an interview with the Wall Street Journal where Donald Trump, the US president, said that the dollar is getting too strong, and that accelerated the dollar's slide, which had already been on a downwards path this week. There was some positive comments about China, which eased concerns about a trade war or a currency war, although and despite improved risk sentiment today, there's still underlying concerns about the situation in North Korea and, of course, with Syria, where we've seen a deterioration in the US and Russian relationship. In other currencies, the Aussie is doing rather well this morning. We had very strong jobs data out of Australia. We also had very strong Chinese trade data, and that also helped the Aussie as well. The Canadian and New Zealand dollars are other winners as well, and gold is benefiting from the weaker dollar. It hit a fresh 5-month high. So let's begin with the dollar yen pair and the dollar index. We can see the dollar index. It fell sharply. Up until now, the dollar's weakness had mainly been against the yen, and that here we can see it of course fell below the 110 level yesterday. It's currently trading just around 109.20, but the dollar index, we can see it fell sharply against other currencies after Trump's comments that the dollar is getting too strong. He also said that he prefers to see lower interest rates, and that's actually a reversal of his earlier policy during the election campaign, where he said that higher interest rates are better. That obviously weighed on the dollar. There was some relief after Trump said that he will not be labeling China a currency manipulator. It is thought that it's because the US wants China's help in reining in North Korea. They want China's help to basically keep North Korea in check. There are fears that North Korea could conduct another missile test over the coming days. Although there is still some anxiety in the markets, where next week the US Treasury Department will publish its latest semi-annual report on currency practices by other countries, and it'll be interesting to see which countries will be singled out in that report. And of course, we have ongoing uncertainty about with Russia. Trump, again, another turnaround. He now is saying NATO is not obsolete, as they want to put a united front against Russia, who so far is not willing to admit that Russia is indirectly responsible for the chemical weapons attack in Syria, as Russia is the Syrian regime's closest ally. Moving on now to the Chinese yuan, it surged ahead today to a 2-week high, mainly on the back of the weaker dollar, but also on very strong trade numbers that we had out of China this morning. We saw Chinese exports jump by 16.4% year on year. That was the best in 2 years. Expectations were for 3.2%, so there's a big difference there. Imports also rose sharply by 20.3% in March versus expectations of 18%. And also the yuan is also benefiting from the fact that from the improved relationship with the US, there's a receding threat now of the US imposing trade barriers against Chinese products and also calling China a currency manipulator. Moving now on to the Australian dollar, we can see that big jump late yesterday and earlier this morning. The Aussie is at a more than 1 week high of 0.7595. It was boosted by the strong Chinese data, but also on very positive employment numbers, which rose by 60.9 thousand in March versus expectations of just 20,000. And also we had an upward revision to the February figure, which was revised up from minus 6.4k to 2.8k. And this was combined with a big jump in full-time jobs. Up until now, the majority of the job gains in Australia have been in part-time. So that's indicative of an improving labour market in Australia, although the unemployment rate was steady at 5.9%. But overall, the data does suggest that the Reserve Bank of Australia is unlikely to cut interest rates. That was pretty much the case since late last year, early this year, although more recently some of the weaker data had pointed to a possible cut maybe later this year, but now those expectations have been sharply diminished. And let's have a look at the Canadian dollar as well, because it was boosted by the Bank of Canada yesterday. They held rates at 0.5% as expected, but the bank upgraded its GDP growth forecast for 2017 for Canada from 2.1 to 2.6%. The Governor, Stephen Poloz, said that a rate cut was not discussed at the meeting, given the recent stronger data, and that helped the loonie hit a 6-week high of 1.3224 against the US dollar. And the New Zealand dollar is also benefiting from the improved risk sentiment. It broke just about the 0.70 level against the US dollar, and apart from following the Aussie high, it was also the Kiwi is also being supported by strong manufacturing data. The country's manufacturing PMI rose to 57.8 in March. That's the highest in over a year. And in commodities, gold is of course doing well because of the much weaker dollar. It's currently at $1,285 an ounce. It hit a fresh 5-month high earlier today. Oil, though, is not doing so well. And despite the fact that oil inventories in the US fell by more than expected last week, according to the official EIA data. And the reason for that is because OPEC raised its forecast for non-OPEC output in 2017, mainly because of higher US production. Although the report did also say that OPEC cut its output by more than expected in March, but despite that, traders appear to focus more on the fact that rising US production is offsetting the cuts being made by OPEC, and we can see that US crude has slipped back below the $53 a barrel level. Quick look at European currencies. We saw a big jump in the euro and the pound yesterday from the dollar slide. The euro is back down again this morning. We've got ongoing concerns about what's happening in the French election campaign. The French presidential election is on April 23rd, just over a week away now, and recent polls have suggested that the far left and the far right parties have been making headway, so that's worrying investors. The pound, though, it's at a 2-week high, although it's still muted against the Japanese yen. The pound's been boosted this week by good inflation and jobs figures, which suggest that the Bank of England could be raising rates sooner than expected. But also they eliminate fears of a sharp slowdown in UK growth, at least in the foreseeable future. And quick look at today's economic calendar before we go. We already have discussed the bulk of the data released today. We also had German final inflation figures, which were left unrevised for March. Coming up later, we're going to have US producer prices and the weekly jobless claims, as well as the preliminary University of Michigan Consumer Confidence Index and manufacturing numbers out of Canada. That's it from me. Thank you very much for watching and have a great day.